Hi guys, and welcome to another market review. Today is May 14, and we had a trending day. Actually, range bound then trending day in the afternoon session. So let's take a look at what happened. I would say today's price action was quite um, spot on the 1 minute. It was good morning, and it was a great afternoon session, I would say. So initially, from the range high to range low, the equilibrium, which was mentioned yesterday, it was rejecting there. And at 8 o'clock, 8:30, the news manipulated there, took the sell side, rejected that level, and retraced very sharply. So that was the first thing that was notable for this New York session. And then on the lower time frame, I'll go down to 1 minute because that's my primary. That's my primary time frame that I'm operating on. So after that rejection here, as you can see, it is still respecting, even on the 1 minute, respecting the range equilibrium. That's a quite clean rejection, and there is a rejection block here. And it rallied, displaced into the fair value gap, 830 fair value gap, and within this price action, there was an S&T divergence in between assets between ES and Nasdaq. So, which made me think going into 9 o'clock, 9:30. All this information gave me a long bias for the day, and the draw liquidity was, the draw liquidity I was looking at was, I think it was Friday, yeah, Friday's high, because it is rejecting the CE of that range, so you should be looking at that range high, right? So buy side. Initially, if you were in the live stream, you know that I was looking for this raid on the to the buy side, S&T rejection. There is this accumulation here within a fair value gap, right below a CB, which is what? Which is a trap. This is further manipulation essentially. So the price never touched that VPR, but it's what it is. So it rallied, displaced one more time, formed a breaker block, breakaway gap, rallied, and this is 9:30 open, right about this candle here. Now, with the 9:30 open, I would say there is a short-term dealing range from 8:30 lows, but we already established, like before 9:30, I think the draw or the bias, directional bias, was already established because of the rejection, S&T divergence, like everything was there for a potential buy model. So going into the day, if you were short, I think you need to re-evaluate your analysis. C versus trapped shorts. So there's a range high, range low. Here you can take a look at this dealing range, or you can take a look at this one right here, or this is my personal favorite, because the S&T low should not get violated. You can look at the range from there, because this is essentially an order block, and it should hold the price. So I will look the range EQ from S&T low to range high. There's a pullback. I think there was an S&T divergence at the highs at the moment. Let's see here. Yes, S&T divergence, which means you can expect a pullback. Price came down into range EQ. There's also a fair value gap, but that's not in discount, so disregard that fair value gap. What there is, hold on 1 second, is a breaker block, and the lower portion of that breaker block, or the mean threshold, is at range EQ. So that is a higher probability point of interest. Or you can use this BPR as well if you want to. There's nothing wrong by doing that. So it came down there into discount immediately after reversed, and now it formed a rejection here. There's a rejection block. If you see this that means price rejected the discount area, meaning you should be looking at the buy side, right? So for me, after the rally, it formed a new range high because it rated the buy side. So there's a new range high. Smart money reversal is still here, so I'll keep that range EQ. Price reversed, and there is probably another SMT at these highs here. Let's see. I don't see it. No SMT here. But regardless, it came down into range EQ, and at range equilibrium, there are a couple things. First one, there's an order block. You can use the order block because it's in a discount. You can use order block mean threshold in a discount, or you can use the inversion fair value gap, which is also in a discount. So this inversion fair value gap became, so we're both 10 o'clock. First rejection, second rejection, third rejection, rallied, and you can see the bodies, how it's respecting the range equilibrium. That is something to note. That is very important. If you're long, you want to see bodies rejecting range EQ from above. Here I want to see if there is any further SMT divergences or not. There is an SMT divergence here, I believe. Give me 1 second. Yes. With this low making a lower low, and this one is making a higher high, a higher low, meaning ES is turtle swooping. You can long that. Zero bullet, rally, buy side was tagged. So if you were to be long here, let's say you long the range EQ, and your stop loss should be below the S&T low, which is 20.25 points. Target was buy side, and this was a trade, pretty fast, pretty clean, and this was a 5-bar trade, pretty clean. I missed this, but whatever. And then after buy side, it came down into range EQ one more time, but here's the thing. There's a tick price action here, and this tick price action was never broken down. When this happens, you can expect two things. Okay, first one, you look at the range EQ, it's respecting first of all. Okay, this is actually not the range EQ. Here's the range EQ. Because it made a new high. So thick price action getting rejected. That price never broke the lows. That's the first thing. And secondly, when this happens, you look at a short-term dealing range from thick price action low to range high, and then if this wants to rally, or this wants to rate the sell side here, it should not violate the last premium fair value gap here. So with this candle at 10.557, because it invalidated the range EQ and broke above, it should have rejected here. It didn't, so ditch the sell side ideas. That's the first thing. The second thing is when price came down into this thick price action, there's something going on here. Here's what's going on. This is the premium fair value gap in the bigger range, the last premium fair value gap. But what is going on below? There is a consolidation. So from the highs here to this low, or you can take the consolidation just here as well if you want to. Price is accumulating, meaning it is forming a trap shorts. With that trap, at 10.55, it inverted it. Okay, that is the invalidation of price wanting to go to sell side. So you shouldn't be seeking sell side once that happens. Here you can draw this in time. I'll draw it all the way down here to see what happened afterwards. Then price rallied, came down. This is choppy price action because it's not creating really major structure. It's just range bound between trap shorts and range high. Came down to the BPR. This is lower SPY. kind of chopped here. So it became really choppy at range equilibrium here, as you can see. But within this price action, there's something notable. Here, first of all, there's an SMT divergence here. Did its job to the sell side and became choppy afterwards at range equilibrium, right? Then here, this was SMT divergence. Price tried to run on liquidity to sell side, failed. But this failure has a meaning. The failure is it happened at range equilibrium. What does this mean? This means price tried to run on liquidity to the sell side, failed. Not engineered liquidity. First thing. Second thing, before going down there was another engineered liquidity here. So if it fails to break below, what's going to happen? It's going to run on the opposite side. PSL. And then with this rejection here, it also formed an SMT divergence. So here, actually, bullish SMT divergence. That bullish SMT divergence caused a displacement. And that displacement, here I'm going to delete this. Or wait, hold on, actually. I'll hold that for a second. This displacement is in discount. High probability displacement. Retest and rally. Where does it go? It goes for the buy side. Where is the buy side? Engineered liquidity. That is a high probability target. Now, if it can go higher, where is it going to go? It's going for the external range, which it did. But let's take a look at the 1 minute order flow. Here on the 1 minute order flow, there's a discount fair value gap. This is a long. If you miss this long, you can look at the trapped shorts and that inversion fair value gap, which is essentially a low risk buy. You can buy those wicks as well, which is a late entry, but if you miss the first initial entry for whatever reason, you can take that as well. I'm going to delete that and I'm going to read the 1 minute order flow. So displaced all the way up here, formed an order block. Order block was restricted, right? Rallied again. Now the internal range is taken out. You could expect a further manipulation here. It came down, formed a new, let me see, formed a new pullback, meaning this pullback is causing an order block to form, right? Here, let me see if there was an SMT divergence at the highs. There's an SMT divergence also, which is how you can anticipate market is about the pullback. So the pullback happened, and the pullback, let's see if it happened to the range EQ. It was not range EQ. What about the external range EQ? It was also not up into the external range EQ. Hold on, actually, I'm looking at the wrong low. It should be here. Range EQ. Why is it here? Because these lows is still in that range. So you need to look at from the trap to the buy side. Actually, not here. Here. This is the external range. So as you can see here, pullback was into range equilibrium. There are some bullish PD arrays here as well. You can utilize those. Premium fair value gap, rather discount fair value gap. Came down, wicked, body's respecting, body's still respecting the range EQ, and displacement, the first displacement. Also, I forgot to mention here, it formed a new trap. You can use that BPR as well if you want to. But there's a fair value gap, that's why I didn't mention this. So here displaced, touched the fair value gap, and immediately after it rallied. So I would say afterwards, if you miss this long or this one, you gotta let it go. And the external range liquidity was taken out. Price pulled back into that level specifically and rallied furthermore. But that is not my main concern, because I think what we all need to do is, as day traders, is just to trade this, and that's it. And the rest will be runners, essentially, right? The rest is runners, so I'm not going to look at this price action here. This is just an overextension. So here, a couple things you can do. You can also look at potential like manipulation legs and stuff like that, standard deviations. But here's the highest probability trade because it's in a discount. If you miss this, anything below this range EQ is permissible. But if you're longing afterwards, that is you doing wrong and you taking a big risk. Okay, so here, let's say you long that. There's IF80 fair value out, which was perfectly played out. Stop loss should be at S&T lows, which was 8 points. 8 point stop loss, pretty good. This is pretty generous. First partial engineer liquidity buy side because you don't know whether it's going to expand furthermore or not until you see both PDRs being respected afterwards, and there's no rejection here as well. So this has to be a partial. If you're holding your position, not taking partials after engineer liquidity buy side is taken out, you're doing it wrong. You have bad position management. So in this trade, what you need to do is take half off here, engineer liquidity buy side, stop at break even. That's it. Because if it broke down, formed a fair value gap here, it could have ran into the engineer liquidity here. Okay, but it failed to break down, so it didn't do it. These things are all conditional, okay, guys? I want you to understand that. But this was a clean trade. So let me look at CL also before I close this. Let's see what crude oil did. Because it's been very eventful lately. So the drawn liquidity last week was the daily fair value gap, which was tested, rejected very fairly, came down. I think we're looking at, so right now it's chopping at, not chopping, but going back and forth at range equilibrium, OTE here. I think there's not US oil, but UK oil. I think there might be S&T divergence here. CL, UK oil, crude oil. Let's see. Oh, okay. Am I on the wrong? Okay. Hourly chart. Let's see. Let's see. I don't see. Yeah, I don't see S&T. Oh, actually, hold on. Equal highs. Kind of fell short, but it's not like meaningful. So let me go down to 15. We might have something on a 15. Here, yeah, I think on the 15-minute it's permissible. I would say higher high, higher low, and it's trading into what? PPR here. CE rejection with S&T divergence, it's signed lower. What's the highest probability target? This is a market maker sound model into horizontal consolidation low. So here you can also look at the range EQ. This range was never broken. Actually, you can look at here, and ultimately here. And this is another short entry. This is probably the last resort. Like if you miss this move, you can look for short here. But let's go down to 1 minute to see what's happening really. So this is 6 o'clock. I want to look at the New York session. So initially New York actually rallied. But here in this price action, what there is there's a 3-drop pattern. That 3-drop pattern caused a displacement here, so that is a high probability to long short because it gave a displacement it displays lower. Then you look at the range EQ, and you think about that range. This is a premium fair value gap of the 1 minute. That is a sniper short entry. Where would you target? Equal lows. That's the low hanging fruit objective. So I would say this is where pretty clean. And if you have a high conviction, like because this is daily, like on the high time frame going lower, you actually don't need to have a market structure shift here before going short. There's 3 drive. It is supposed to do its job, right? So you short that, and that's it. Also, you can look at this range. Any retest about the range EQ or higher. Hold on, here, let's do this. Retest about the range EQ or higher is another short entry or a pyramid entry. So it's pretty clean. I think it is ultimately drawn into what is it, 74.28. I think we're gonna have a breakout here to the downside at some point, but we'll see. I would also look at the range EQ of, not range EQ, but the CE of the daily sell side. Just something, because there is also fair value gap here. It could reject this level. We'll see. But primarily, I personally, if I was trading CL, I would be primarily looking for shorts. So for Nasdaq going into tomorrow, we have CPI. I think like after today's close, especially, I don't think anyone is expecting like CPI being bearish. I think it's going to be a spike up at least into, what is that level? 567, which is the daily engineer liquidity. If you pull the CE annotated, you'll see this is actually 4-hourly, I would say. Hold on, let me see. Is it the daily or the 4-hourly? I mean, I think it's the daily, but it's not as clean as I want it to be. But yeah. So going into tomorrow, obviously you're not going to be trading before CPI. Everything will happen after New York Open, so be patient. Be patient. CPI is a dangerous day because it often gives and provides very large candles, especially on the 1 minute, and you don't want to get hurt, you know. So let's delete all that. Here now we have a new range. I would say like the engineer liquidity down into the low from today. Look at that dealing range, okay? And maybe, I'm saying maybe, the CE of that fair value gap on the hourly could potentially be traded into to go higher. But we'll see. It's too early to tell. I need to see the overnight price action because any fair value gap above like here, not any fair value gap, any S&P divergence here above that fair value gap will make this fair value gap a breakaway gap. So be mindful. Definitely look for S&P divergence, especially on a lower time frame if you don't want to get manipulated. So that's not, today was pretty clean, I would say. Hope you find this insightful, guys. I'll talk to you tomorrow. Thank you.